Hello everyone. Today we'll talk about the head and shoulder pattern. What is it, how it works, and how to trade it. Firstly, let's see the parts of a head and shoulder pattern. So, as per the name suggests, a head and shoulder pattern has three parts. Firstly, the head, which is the topmost price from which the sellers take over. Secondly, there are two shoulders. These are the most contested regions between the buyers and the sellers. And lastly, the neckline. This is the deciding territory from which it is decided whether the buyers can again push the price back to the top, or the sellers have taken control of the price and they are trying to move it further down. Now let's talk about the sentiments of the head and shoulder pattern and how it works. The basis of the first shoulder defines the demand zone. This means that this zone is the demand zone from where the buyers tend to push the price towards the top, creating the head. Now, the head defines the point from which sellers take control of the price. This region is rich in the sellers, and thus the sellers start to sell off, and they tend to push the price towards the neckline again, which also happens to be the demand zone. As soon as the price reaches the demand zone, the buyers reinitiate buying, but this time they are not able to create another higher high or another top, since the concentration of seller shifts from this region to this region, and there is a contest between the buyers and sellers, thus creating our second shoulder. The top of the second shoulder defines the point up to which buyers were able to push the market before the sellers drag the price back towards the demand zone. This is the point at which the contest takes place between the buyers and sellers, and ultimately the sellers win, and thus they push the price towards the neckline again. And after the price reaches the neckline, there is a high possibility that the price breaks down, and when the breakdown occurs, the breakdown suggests that the sellers are in full control of the price movement, and thus the price is expected to fall further. As soon as there is a breakdown of this demand zone, it is said that the next demand zone lies near the next support, thus there is a huge gap in between, and thus it is expected that the price will fall further towards the support. So now let's check this out on a real chart. So here we have is the Bitcoin versus Tether chart on a weekly time frame. Here we can spot a head and shoulder pattern. I will just draw it for you guys. The tool I am using is from the TradingView platform. So right there, here we can see this is the left shoulder, this is the head, and this is the right shoulder as we talked in the video. So now let's see how we can take a trade on this pattern. So here you can see as soon as there is a breakdown, we can go short. Our stop loss should be above the right shoulder, few points above the right shoulder, and we should expect a target of at least 1:1.5. That preserves our risk to reward ratio, and thus here we can see the target was easily achieved. Now let's move and let's see how we can manage and minimize risks. So now let's talk about the risk minimization and management part. Number one, you should always look for at least two more reasons to confirm your theory. After seeing the head and shoulder pattern, you should always confirm it with some other indicators or other price action strategies, like it can be a MACD crossover or an RSI divergence or whatever be it. There should be at least two more reasons which confirms your theory. The next, you should always use proper position sizing. You should always calculate the max loss you can endure before entering a trade. Next will be never average your trades, rather pyramid them if required. You should not average your trade just because it's going against your direction and you hope that you will be entering the trade on a cheaper rate. Rather, you can pyramid your position. It's more like when the position is going in your favor, you can add more quantity and just tail your stop loss till the target is hit. And lastly, do not trade this pattern if the head and shoulder ratio is less than 1:1.5. This will totally mess up with your risk to reward ratio. So that will be all for this video. Thank you.